talk about it a lot on the show. Jacksonville specifically being one of those MSAs, has 1 million in population, also a very well-diversified local microeconomy, right? The idea that it's heavy government sector of naval bases and armed forces, healthcare being a really big driver here, logistics being a big driver here, and then finance and fintech kind of make that like rounded out thing where you're not worried about one Amazon distribution center shuts down or, a factory leaves town, that this is really good. Tell me a little bit about what you look for in a team, man. How do you evaluate whether a property management team is somebody that you want to trust to invest in from 3,000 miles away?
Just dropping back for a moment to your previous point, Jacksonville is great. You are like the state's transportation and distribution hub. And those are the jobs that can't be outsourced to some other part of the world overseas. Transportation and distribution jobs, they're locally anchored there. They need to stay anchored there. And those are also the types of jobs conducive to someone that wants to rent a place for a few years more so than own a place. So that's something that I really look out for. But in vetting a property manager, I like to go to the Bigger Pockets forums and see how that manager is actually done. In the past, again, history, right? Over hunches, how have they actually done historically? And, I really like to start from there and see what they've actually done and see that they have a good record of communication and rent collection. So that's what I do as a passive investor. And, like how that really looks for me in my life is I own properties in various U.S. markets. I typically like to get multiple properties in one market so I can have one manager, say in a place like Jacksonville, manage a number of properties for me. And then I get an email each month with my monthly statement from my property manager showing all the rent income and all the expenses, and then a distribution in my bank account. So I like to be in a few multiple markets with that trust, understanding that property manager is actually more important than the property itself. A bad manager will drive a good property into the ground, but that's how it really looks.
Spoken like not an average investor, Keith. I love it, man. We talk about this stuff all the time. Yeah,
average is terrible. That's a synonym for mediocre. I mean, who wants that?
Agreed, bro. Agreed, man. We got a question here from an anonymous attendee that is asking, please explain what is the tax-free gain at the time of sale? You were mentioning something along the lines of saving taxes. You want to explain that a little bit?
Sure. If you buy a property for $500K and sell it 10 years later for $1 million, you have a $500,000 gain. In a certain timeline, after you sell that property, if you, within 45 days, identify a replacement property and close on it within 180 days, you can take that $500K gain, tax deferred, and put that as a down payment into your next property. So if you made that $500K gain, therefore, as a 25% down payment on a $2 million building, you just traded a $1 million building for a $2 million building and didn't pay any tax on that $500K capital gain from the sale of the property. Now, technically, in the IRS vocabulary, it is a tax deferral. It's not actually tax-free, but you can continue to make those deferrals over and over again and trade up. And that process right there that I just described is called a 1031 tax-deferred exchange. I have legally never paid any capital gains tax in my entire life because I either refinance properties and pull the cash out or trade up in the manner that I just described there with that 1031 tax-deferred exchange.
You've never paid taxes on that thus far. So what are the economics of that long-term, Keith, for you with your why? Are you then at some point going to hand down those properties to another generation, or do you just keep it rolling and your cash flow becomes more and more positive? Can you talk to me about the economics of like how that plays out long term when you're deferring taxes like that?
Yeah, I keep it rolling. I keep trading it up to more and larger buildings. And really, in a sense, that way, once I planted the seed with the first smallest property, I'm really not adding any more of my own money as I get this tax deferred snowball rolling forward. And importantly, the basis steps up such that your heirs don't have any tax liability either when you transfer the property to them that way. So this 1031 tax deferred exchange I've been describing has been around for about 100 years. So I wouldn't expect it to go away anytime soon. Although at times presidents have brought it up and they've thought about doing away with the benefit, seeing that maybe it benefits the rich more than the poor. But overall, they've kept it in place because they see that, providing individual entrepreneurs like you and I, the incentive to provide good housing for people is good for society. And, if I can, Pablo, I brought up the word good. Really, we're here to do good in the world. We're here to provide housing that's clean, safe, affordable, and functional. Like, really, that's my fourfold mission in trying to do some good in the world. I mean, imagine if everyone did that. We could probably abolish the word slumlord if everyone thought with that mindset and either managed it themselves responsibly or outsourced it to a good property manager so that clean, safe, affordable, and functional can be done.